Welcome to the OANDA Market Pulse charting analysis video. My name is Craig Erlam, Senior Market Analyst at OANDA. In these videos, I will be giving my personal analysis on a range of instruments using a number of technical indicators available on the FX Trade platform. Now, let's start today with euro dollar. Now, we have seen a spike in euro dollar recently. This is something I've covered in previous videos. But what's interesting today is that we've seen it break through that 110 level, which had previously provided resistance. It's also provided support and resistance on a number of occasions as well. It's a key psychological level, so a break above here would suggest that the market is becoming increasingly bullish. Now, 110 to 111 is the region which I've highlighted as being key for this pair going forward, because if we can see this area broken in the coming days or in the next couple of weeks, that would suggest the market is much more bullish and would suggest to me that we could see a move back towards these previous highs from October and, a number of occasions this year, around 114.50 to 115. So this 110, 111 region is extremely key for me. Now, we saw it break to 110.35, 110.45 yesterday, and it is pulling back today. What's interesting, though, is this previous resistance here, which is now providing support for the pair, is currently holding at this moment in time. It's also around the midpoint of this candle, and this is quite similar to a Marubozu candle where the candle opened near the low and closed near the high, so that could be a bit of a bullish indicator here as well. If we see this continue to trade south today, potentially closing below the open of the candle, which seems unlikely at this stage, and that would be quite a bearish sign, but at the moment it's still looking quite bullish to me, and I do think we are going to see this 111, well, it looks as though we could see this 111 level tested in the coming days. That's previous support as well here from throughout September. Now, the next chart I want to see, which coincides quite nicely with this, is euro sterling. Now, as I've highlighted previously, we've seen a similar moves in euro sterling because these moves have been largely driven by strength in the euro off the back of these this far weaker move from the ECB last week. But what I find interesting here is, while we saw the move back up towards 72.40, which again we had this key region of resistance in euro sterling as we had in euro dollar, 72 to 72.40. While we did see this level broken a couple of days ago, it has stalled quite quickly, and now what we've seen off the back of this is what's shaping up to be quite a bearish setup. Now, of course, euro sterling isn't exactly the same to euro dollar, and the key difference is that until now the pound has looked much weaker than the dollar. But if we see a reversal setup in here, like an evening star formation, like it's currently shaping up to be, so if we see today's candle close more than 2/3 of the way into the real body of Tuesday's candle, that would leave us with an evening star formation, which is quite a bearish setup, a 3-candle bearish setup. If we do see this, and then we see these previous lows come under pressure, 71.65 and maybe even lower, then that could guide euro dollar lower as well, or could be a signal that euro dollar is topping out as well, at least in the shorter term. So again, something to keep an eye out for here. The next chart I'll cover is cable. Now, the reason I wanted to touch on this is we saw this broad-based dollar weakness yesterday, and that really helped the pound surge against the dollar. We saw it take out these previous highs. Now, the reason why this is important is because prior to this was shaping up to be a typically bearish setup. We'd had this clear downtrend forming here in cable since the middle of August. Now we'd seen it make new lows, pull back, find resistance around this previous support, around the 61.8 Fibonacci retracement level, a very typical bearish move here before moving lower, and it looked as though we were going to see these 149 levels retested as a new level of support, potentially falling back to 148.50 if we saw a break of that level. But then on the back of that broad-based dollar weakness, we actually saw these prior highs taken out, the 61.8 Fibonacci retracement taken out, which may suggest that the pair is looking a little bit more bullish in the short to medium term. So what's going to be key now here is, firstly, it looks as though it's going to continue to be bullish in the coming days, because this is a very good Marubozu candle. The pair's pulled back to not even reach the midpoint of the of this Marubozu candle, otherwise called the Marubozu line, around 151, before it has sprung higher again. So this looks more like a consolidation for me rather than a more bearish, I guess, reversal, and this suggests to me that we are going to see these prior highs around 153.30 tested. Now, why that's key is because we've seen lower highs and lower lows being made since the middle of August. Now, while we have seen occasions when we've seen higher highs being made, so you can see here we saw it pull back higher highs, the fact that these the broader trend continued to make lower highs suggested to me that this was still bearish. If we can see this pair move up towards these 153.40 levels, as looks quite likely at this moment in time, of course, though we haven't seen today's candle close. If we can see these broken, and that would break the trend that's been apparent since the middle of August, and may suggest we are going to see a broader move to the upside. So something to keep an eye on here for today. Another thing I wanted to highlight today is Australian dollar. Here we've seen a very bullish and clear move off the back of this pullback towards 71.70, clear level of support here on the 23rd of November, again on the 30th of November, and again on again yesterday. What's happened here though is we've pulled back to the 61.8 fib, or the 50% Fibonacci retracement level, failed to see a close below here, failed to see this 61.8 fib broken, and what we've actually seen is a bullish a morning star formation. We've seen new lower lows being made, we've seen this indecision candle form, and then the pair has really pushed on from here. Now this looks like we're about to see 73.80 being tested. Level of resistance on the 4th of December failed to close above here. Big level of resistance on the 12th of October failed to close above here. If we see this level broken, now of course we do appear to have resistance again at 74.40, but for me this is a very bullish signal if we see 73.70, 73.75 broken, and that would suggest we are going to see a more prominent move back towards these prior levels of support, maybe around 75.30 to 76. Of course we've got the 233-day simple moving average coming before that, but I can't stress enough how much of a bullish move this could potentially be if we see 73.80 broken, and again, and particularly if we see 74.40 broken as well, which I would expect to see if we do see 73.80 broken in the meantime. So again, some very important moves occurring right now in Australian dollar. Next is the dollar yen. Now we seem to have missed the bulk of this move that I wanted to highlight, unfortunately, but what we've had is we had this consolidation, or this sideways trading in dollar yen for the majority of November. This was between 123.60 and 122.20. Now you saw this kind of sideways trading, clear support and resistance along the way. This was broken yesterday to the downside. Now this kind of strikes me like a kind of triple top or quadruple top, or they're all pretty much the same thing, potentially more severe the longer it remains in this trading range. They always say a triple top is more significant than a double top, and you'd imagine the same be true if it was a quadruple top as well. And what we saw, because the great thing about these is when you do see the level broken, when it is a move back to the downside, it tends to give you some form of target range for here, because you tend to take the highs, most recent highs and lows, and then you project that move lower. Now what that would give us would be 122.20 and maybe 123.45, 123.50, so about 130 pip move. Now if you take that from these lows, that takes us back to around 121, which is where it ran into support yesterday. So this move did play out, but unfortunately it appears that we've missed it at this time. I do think we could potentially see more of a move to the downside though, because while this is prior area of resistance really throughout this September period, we are only seeing consolidation as it stands today. Well, this is what this candle appears to be right now. If we look at the 4-hour candle as well, that kind of suggests that you're seeing some consolidation, or we've seen consolidation and a move to the downside, which could be very interesting. It looks as though we could potentially see this 121 level come under pressure once again. If that 121 level's broken again though, it might suggest that we're going to see a move back even lower again, and you've got this level around here around 120.50, prior level of resistance throughout this March and April period, prior level of support in July as well. So this could be your next key level of support here around 120.50 if 121 is broken. And again, the yen pairs, dollar yen, whatever, these do tend to like those 50, 100 levels, tend to be quite decent psychological support and resistance levels. The final chart I want to look at today is WTI. The reason why I wanted to highlight this one is simply because we have seen some quite significant moves in recent days. We saw $40 initially broken on the back of the OPEC announcement. Since then, we have seen this the pair break. We have seen WTI break to the lowest levels since February 2009. Now we've seen this pair off again, and we saw that. What I find really important with this is that we saw that strong inventory build EIA crude inventories yesterday, and we saw WTI propel higher because we've seen this much higher build than we were expecting. In fact, we were expecting we were expecting another draw in inventories, and we saw the opposite. So we saw WTI propel higher towards 38.60, but immediately we saw that move reversed. And now we've seen it break back to the downside and even test the previous lows today. So if we can see 36.20 broken, then that would suggest the market is very bearish. Yesterday's move for me suggests it's bearish, just because off the back of this draw in this surprising draw in the inventories, we did see that move immediately reverse. That's very bearish for me. If we see if Tuesday's low is broken today, and then even a close below there, then that will suggest the market remains extremely bearish, and I still think we could see a move back towards these low 30s in the medium term, between say 32.30 and 33.60. So another key move to be looking out for in WTI crude. For more in-depth news and analysis, check out OANDA Market Pulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll get access to OANDA Forex Labs, which has a lot of great tools designed to help you in your trading.